The Adelaide property market has been on fire for the last 4 years, up 70% and over $300,000 in just 4 years. But there are some concerning signs. I've done a deep dive into the Adelaide market in full and discovered some cracks are appearing. Could Adelaide be in bubble territory? That's exactly what I'm trying to find out. And by the end of this video, you'll know whether you should continue investing in Adelaide or whether you should sell and get your money out now. The conclusion I've come to at the end of this video may surprise you. It surprised me when I went through it all. Let's go. So, Adelaide has been on fire recently. It is on fire right now. Demand is outstripping supply dramatically and house prices are rising very quickly. If you bought yesterday, the day before yesterday, that time was better than today. It's rising so fast that you want to be in the market rather than outside of it. Look at the data set here, 15% inside a year and 4% this quarter. If you do the math there, it's rising at a rising rate too. Adelaide house prices are increasing quickly at the moment. You have that in asking prices from SQM as well. Lead data here up 4.5% in the last quarter. These numbers are astonishing. House prices should not be rising 5% in a quarter anytime, but it is in Adelaide. The growth rate is so strong, it is ridiculous. You can see that in the chart post-COVID, Adelaide house prices up 328,000. It wasn't that long ago we were financing deals in Adelaide for 328,000. That's crazy. Now house prices are up 70% in such a short period of time. And the best thing for property investors here is Adelaide was really affordable. You could tip in a $350,000 property investment and find pretty good housing stock. Now that house will be worth pretty much $600,000, $700,000 today. We've got some clients who are cashing out from their Adelaide investments a few years ago and paying down their Sydney owner-occupiers simply as an investing strategy to help them reduce their debts. That's what the power of a property boom can do for you. It can really accelerate your goals and help you achieve your financial goals in the future. And this type of property price growth is extraordinary. So let's keep going into it, and we can see that days on market are coming down. It's already very low. Houses are selling very quickly. If you're someone thinking of selling a house in Adelaide, I got good news for you. You can pretty much list it, call a real estate agent and say, give it to one of the buyer's agents. Can you please get rid of my property? And someone out there will be willing to overpay. We've seen it a number of times. Everyone, this is a little bit of an insight. I wasn't planning on saying it, but we've seen a number of valuation shortfalls in Adelaide from big buyers agents, people buying up, paying top dollar simply to get access to this rising market. I think that's okay though, when house prices are rising 5% this quarter. If you've overpaid by a couple of percentage points, by next week, you've paid market rates. So it doesn't really matter if you're overpaying right now. When property prices are rising this quickly, you're gonna have to overpay to simply get your hands on something. It's a bit like toilet paper during COVID, crazy. Anyway, we've got vendor discounting, pretty much the same in a year. You don't need to discount much. Vendors don't even bother discounting. This 3.7% figure, forget about it. You don't need to discount. Go ask for a bit more than you actually want. You'll probably get it. Real estate agents will be having a field time in Adelaide. This is spread across a different market though. If you have cheap Adelaide properties, so bottom 25% of Adelaide properties, think Upper North, Elizabeth, Salisbury, those areas, you are doing very well. Curtis, if you're watching this, I recall me and you, we caught a plane up to Adelaide about 8-9 years ago and checked out these areas and we're like, there's a lot of land here. It's so cheap. It started with a 180, 190,000. This is about 7-8 years ago. Those now probably cost around $500,000. The price growth is extraordinary here, and you could see it 7% in the last quarter for the bottom quarter, 7%. You extrapolate that out, that's nearly 30% year-on-year growth, and that might actually be achieved, 25 to 30% in a year. Absolutely ridiculous numbers. House price growth is in a mega boom. I've got to put mega in twice. That's how fast house prices are growing in Adelaide at the moment. Stock levels, what's coming online, how much supply is there? There's clearly a lot of demand and not enough supply, but let's take a look here. Oh my God, look at this. This is nuts. You have CoreLogic modeling out the number of sales versus the number of listings in this period, in this spring period. You have 7,600 sales with only 4,500 people selling. This would be the highest, biggest imbalance in Australia. That's the summary. That's my main headline. Adelaide imbalance, biggest in Australia. Way too many people want to buy a home. There's not enough out there. It's like going into Coles, those days of COVID, and you have 100 people in the toilet paper aisle being like, I want a piece, I want a piece, I want a piece. Everyone wants a piece of Adelaide right now. But are they making a big mistake? That is what I'm trying to discover. Why does everyone want a piece? And are they missing something? Are we over-egging this market? Let's check out what is going on with new listings. Adelaide new listings back at average levels. Yes, there's been a rise in total listings. There's been a fall in total new listings against the average. There's been a recent increase, but broadly, not enough homes are coming to the market. Listing levels are at its 5-year average, and the total listings are 33% below its 5-year average. At exactly the same time as everyone wants it, there's no one producing it, there's no homes coming up for sale, and when you look at the construction data, all I see is a nosedive in South Australia. In pretty much every metric here. In South Australia, houses being built, nosedive looks like a big dramatic downturn, looks like a roller coaster up a few years ago, a long time ago now, 5 years ago, and a fast roller coaster down, and you could see that in the unit market as well. That unit market number is a bit scary. Adelaide apartment approvals down nearly 45%. That is an opportunity. It's an opportunity Australia-wide. We've done a whole range of videos bucking the trend. Stupid idea. A lot of people say I'm absolutely crazy for this, but apartments will outperform houses over the next few years. And if you have a limited budget, if you don't have the money to buy a house, look at apartments. Don't follow these generic rules that people apply all the time. You must buy an apartment, you must buy a house, never buy an apartment. Follow this rule, must stick to these rules. If you do that and everyone's doing that, you're just simply following the herd and doing exactly what everyone else is doing and missing golden opportunities, and that's a golden opportunity right now. Apartment approvals down 45% in Adelaide. No one's going to be building an apartment. Feasibilities do not stack up, so the apartments that are there will become increasingly scarce in a marketplace that is undersupplied. So that is a potential opportunity to look at, even though prices have risen a lot. Let's look at the rental market, and this is the starting point of the cracks. This is where we start seeing a little bit of danger. This is the first danger sign that I look at, a very scary danger sign. Rental markets. The yield in Adelaide is 3.7%. The yield in Brisbane is 3.7%. The yield in Melbourne is 3.7%. The yield in Adelaide is not compensating you for future risks. If I'm investing in Adelaide, I want to get some yield. That's a reason why a lot of investors invest in Adelaide. That reason is gone. It's gone. People are not making money in Adelaide when they buy a property. You ain't buying positive cash flow properties in Adelaide at the moment. You're buying severely negative ones, unless you're buying the really cheap stuff that all the investors are buying. But the general trend here is negative cash flow in Adelaide. So really, really concerning. And when you look at the past, let's look at Adelaide over time. This is the lowest yield it's pretty much ever been at. It gets a little bit hard to decipher here, but looking at that green line, yes, it's the lowest yield it has ever been at. So this is the return you're getting on your investment, lower than ever in terms of income. Bit of a concern there. But you look at rental growth is still really strong in Adelaide. There's been a big drop-off across every other state. Adelaide has slowed down a little bit, but rental growth is still really, really high. The month-on-month change is a bit concerning. It's only up 0.1%, even though the year-on-year change is up 20%. So there could be a dramatic slowdown in rents in Adelaide, but we don't have enough data on that yet. We need a little bit more information. We'll be watching that over the next 3 months. Another danger sign, the pace of rental growth coming down, house prices rising a lot. That means yields will crunch even more, which is really, really concerning. We've got really low vacancy rates, so low, 0.6%. You'd expect that with rents going up so much, just a function of not enough homes. That's pretty much the summary of Adelaide. Not enough homes. I've said that a few times. That's the summary. The data all points it. It's the same thing in the rental market. But what has this all caused? I have this really crazy stat that I heard that I want to repeat to you, and I want you to think about this for a second as well. Affordability is incredibly stretched in South Australia. Affordability constraints are likely to weigh on the pace of price growth. And this statistic is crazy. There's a ranking here of the most unaffordable states in the world, a worldwide ranking. And Adelaide is ridiculously high at the moment. It ranks with San Francisco as the most unaffordable areas in the world, number 8. Yes, Sydney is on this list. Every Sydney-sider knows this. Anyone living here trying to participate, trying to buy a house, knows how unaffordable it is. It's a bit ridiculous. But Adelaide is number 2 here. It's the most unaffordable market in the rental space in Australia. Adelaide, it's supposed to be affordability heaven. It's why people go there. That's been the story over the last 10 years. Hey, can't afford Sydney. Maybe I'll move to Adelaide. Maybe I'll live there, get some cheap rent, finally have some money coming in. That ain't happening. In Adelaide is ridiculous at the moment. You're the most unaffordable market in Australia in the rental market, and in the buy market, you're as unaffordable as San Francisco. Now, I haven't been to Adelaide for a long time, but that does sound a little bit odd to me. And when I went there, especially when I went up north, I saw a lot of land, I saw a lot of potential for housing. Bit different to San Fran, where you have a lot of tech jobs, where earning hundreds of thousands of dollars and huge income spreads between people, and some of the smartest people in the world. No disrespect to the people in Adelaide, but San Fran, a little bit different. Doesn't have Google, Tesla, and all the techie companies there. It's Adelaide, but it's got the same unaffordability as San Fran. This sounds a bit. That's what I'm thinking when I'm looking at this. There's another article here. Some millionaires, some struggling. The fallout of Adelaide's 50% property price hike. That's the headline. And that 50%, it's now 70%. This rise has continued so far. It's soared. That's exactly Adelaide. It's been soaring. But that scares me. It scares me a lot. When something rises this much, I need to look at why. Will it continue? Should I get out? Should I get my money out the door? It's a little bit like crypto. Think of all the crypto investors out there. I know I'm talking about Adelaide property, but sometimes some assets go boom. But that isn't always justified. Yes, demand supply is imbalanced at the moment, and that is why prices are rising. But will that continue? Let's deep dive and look at the economy now and see what the future looks like for the Adelaide economy. Okay, this is where the concerning pictures start arising. South Australia does not have one of Australia's most rapidly best performing economies in Australia. It does with its housing market, and it did have one of the best performing economies in Australia, but that tide has well and truly turned. Let's look at this. Economic growth, 0.6%, well below the Australian average. Retail spending, negative 0.6%. That's the affordability issue going on. Renters, homeowners, everyone being like, holy moly, I can't afford anything now. I'm paying mortgages, rents. My money's just being sapped out the door. Crap, how am I going to go buy those fancy dresses, the coffees, the shop things that I want? I'm not increasing my spending despite the population increase. Equipment investment, businesses, they're cutting back. Equipment investments is how much businesses are investing, and that's been cutting back. Employment growth, this one's negative. I'm going to talk more about this one separately because it's so important. Population growth below average. All of these numbers are below the Australian average, yet its house prices are soaring 70%, and it's the most unaffordable market in Australia in the rental market, and the second most unaffordable in the buy market. And, sorry to say this, it's Adelaide. Let's get into it. Sorry, I think I may have offended some people with that comment, but I want you to take that seriously. Adelaide and Sydney are two different cities. There are very, very different histories there. There is very, very different economies there. There's very, very different groups of people there that needs to be factored in. Should Adelaide house prices be as unaffordable as San Fran, as unaffordable as Sydney, more unaffordable than Melbourne, Brisbane, Perth, everywhere else? Should that be the case? Relativity is part of the equation here. Let's look into the jobs market because this is the concern. This is the big crack. I'm going through 3 or 4 major cracks here. Unaffordability, I've gone through. Economy slowing, another one. Jobs, which is a function of the economy slowing. This is the major one. Okay, unemployment rate at 3.9%. That isn't too much of a concern. But that's the wrong number to look at. That's not the number that you look at to work out whether people are buying houses or not. Employment growth, negative. There are fewer jobs in Adelaide, in South Australia today than there was 12 months ago. You cannot say that about just about every single capital, except Tasmania, in Australia. But Tasmania's coming dead last when it comes to property prices. It's falling, it's not doing well, no one's buying out there. It's not toilet paper, it's kind of like the other aisle where nobody wants. It's the complete opposite in Tasmania. But in Adelaide, everyone wants a house, but people are losing their job. People are they're not creating jobs. You have less jobs than a year ago. Something does not stack up. Job ads are down a little bit, vacancies down a little bit, and the participation rate is down 1.3% in a year. That is a big, big drop in the people who feel like they can get a job. Down on the ground, if you're living in Adelaide, what this data tells you is house prices are ridiculously high. It's really, really unaffordable. I am struggling, or relative to last year, the job market has cooled. There are fewer jobs out there now than there were a year ago. There's more people here fighting over those jobs. We're not growing, and I've just given up. There's 1.3% people. That's a lot of people in a single year who've just given up, being like, I ain't gonna even bother trying to get a job. I'm just out. I don't need to go on the unemployment line. That's why that unemployment rate is skewed, because if you kept all the people who were in a job last year and then said, now you're not, but you go on unemployment benefits, then that unemployment rate will be much closer to 5%, maybe even more than that. So that is why this unemployment rate figure, it's nonsense. Ignore it. Look at the real deep dive into the employment market. Employment growth down and participation rates down. It is concerning. And here's my final bit of information that points out that Adelaide is well and truly in bubble territory. This one gives it to you hands down. This is housing finance growth across every single capital. I didn't only look at Adelaide, I needed to look at everything else because Adelaide spat out the most concerning figure I've seen here. Owner-occupier finance up only 17%, investor finance up 77%. Owner-occupiers are not buying homes in Adelaide. Owner-occupiers are struggling to keep their job. The employments are going backwards. The economy's slowing down. Owner-occupiers ain't buying. It's Sydney investors. It's Melbourne investors. It's interstate investors. It's the biggest buyers agents that are just herding in here. They ain't looking at lead data. They're looking at past data. They're looking at housing supply, housing demand, being like, there's a little bit of a shortfall, but they're not looking towards the future. They're not looking towards this affordability. They are selling you a lemon. And I'm talking about some of the biggest buyers agents here in Australia. They are flocking over to South Australia. It's in the data, 77% financing. It's got the highest investor to owner occupier ratio, 4.34. This means it is an investment-led boom since January 2023. This price growth is investor-driven. You see that in where they're buying. They're buying the lower quartile stuff, the higher yielding properties. This is investment-grade stock. Investors are flocking in. This is going to change. This data set, if employment continues with this vein for another 3-6 months, and if the economy continues to perform like this over the next 3 to 6 months, this trend direction continues, then we have some concerns for Adelaide. Adelaide may indeed be overvalued and could have a little bit of a reversal to make up for this danger sign. So there's my hot take and my summary on Adelaide. I would go so far as to say, if you invested in Adelaide a few years ago, if I had put my money in Adelaide, kind of wish I did, because look at this growth, it's really good. Kudos to you. Well done. Amazing work. Clap, clap. I actually think it's really, really good what you've done. A lot of our clients have bought in Adelaide. I've talked about Adelaide with them for a number of years, and it's been so transformative being able to invest in an area. But property moves in cycles, and just because you bought there 5 years ago and this is the past performance, this does not mean future performance. For future performance, you want to see economic change, economic improvements, job improvements, and something that sustains that housing demand and population growth over time. With a slowing economy and jobs being shed, people will stop moving to Adelaide, people will move out of Adelaide, housing demand will come down, and over time, housing supply will kick in. I can see Adelaide doing well for the next 12 months, maybe even 18 months, because house price momentum is so strong. The investor herd is just falling over themselves, being like, I want a piece, I want a piece, I want a piece, I want a piece, until the music stops. The music is going to stop in Adelaide if this trend continues, and I look forward to doing another video in about 12 months to check out whether this is actually happening and what the latest data says. If you found this video interesting and you want me to do other cities, drop a comment below and tell me which city you want me to look at. And tell me whether you agree. I'm genuinely interested in your perspective. I've just looked at the data and I'm analyzing it all and trying to follow the information to a conclusion rather than coming up with a conclusion beforehand. And my conclusion is, with the investor herd that's there, the employment data, the unaffordability, that it's not necessarily the time to be investing in Adelaide, and it doesn't benefit from rate cuts as much as other cities, so that's something to also be concerned by. So that's my summary on Adelaide. Love to hear your thoughts, particularly if you're from Adelaide. Can you tell me something that I don't know? I'd love to hear from you. Drop it in the comments below. And if you've enjoyed this video, hit that subscribe button, hit the like button, and I'll keep producing more deep dive insights into different property markets all across Australia.